Hello. Is this mic working? Everyone hear me okay? Yeah, good. I'm loud at the best of times. So I am Robert McKechnie. I'm the Product Director for our Consumer ID Fraud products in Equifax. And for the next half hour, my panel is going to entertain you as I ask them some questions. So if I'd like my panel to step on up, that'd be fantastic. So we've got Lucas, Mark and Gary. There he's getting his water.
Hello.
That's fine. So,
You've got that in the wrong place. Yeah. Strange.
So, members. Right, so the subject matter, as you see up there, is exploring the benefits and challenges of open banking API automation. That could be a little bit dry. I hope it's not going to be. The panel, as I say, will entertain you. We might go a little bit off-piste with certain conversations, but the whole point here is to get different perspectives going. So please do use Slido, ask questions. The whole point is to get that information sharing going. But I will kick off with something we have prepared earlier, which is our first question of, what do you think are the challenges of automating consumer decisioning APIs for open banking? Mark, I'll come to you first.
Okay, hi everybody. I'm Mark London. I'm from Finturn, which you might know as Abound or Render. We're a credit technology company and a lender at the same time. Our credit technology is Render. Abound, our lending business, uses Render to make all our credit decisions. What do I think? So in terms of what's the most interesting part of the challenge, I think, obviously, as you alluded to there, plumbing into APIs is a bit dry. It's not particularly challenging. Even, I guess, using open banking to do only income verification and check for basic things like gambling is a little bit boring as well. Still not trivial, completely trivial to do properly, but still, it wouldn't be you wouldn't be living the open banking dream if that's all you're using it for. The most interesting part of the challenge I would summarize as being called the signal from noise problem and the expert underwriter emulation problem. And they're kind of linked challenges. At Abound, we believe in making lending decisions based on the whole narrative of the customer. Not only their credit score, not only their financial, current affordability, but the whole story about the customer. What would you do if you had 2 hours and unlimited resources to go through someone's bank statements? How many bullets could you write about a customer? To what extent could you extract features and little sort of summary nuggets of information about their lifestyle, their affordability, their resilience to various different stresses, cost of living stresses, et cetera, et cetera? The answer is a lot, but it's quite hard to automate the extraction of all of that. So that's the signal from the noise problem. So we've spent 2 or 3 years at building Render, and it's and sieving through all of those bank statements, doing all of the machine learning techniques, the pre-processing, the netting out of own transfers, the getting rid of the horrible Monzo pots, the spotting the missing loans in the credit file, stitching the credit file together with the open banking, figuring out how kind of quickly disposable income gets consumed each month. And there's a list of 1,000 of these features that we develop before you start feeding them into policy rules or decision models. Creating that list of, creating that set of features efficiently, and especially in the 5 or 6 seconds you get to respond to an API, that's the key challenge.
Yeah, okay, thanks for that. Lucas, any thoughts? Same question?
Yeah, I mean, Yaya, so credit card company, sort of use traditional credit models at the moment, but we've signed an agreement with Bud recently. Then we're in the process of sort of plumbing in open banking. To support that with a couple of use cases. So in a slightly different space, but I guess similar in the enrichment and understanding how to blend and splice it into the existing structures of our decisioning. And that's as much around the tech side, but then also around of course, like taking that through your business in terms of your ethos and persuading people that they can buy into it. So with anything new, it's scary, and with credit risk, it's even more scary. So how do you take people on that journey? Again, from Yaya's point of view, we've got in our credit risk side, we've got people that have done that, so have that experience. So that's a really important set in terms of their experience across Europe. But then you're working with your investors and your banks and all of those sorts of things in terms of just sort of laying that path for how you sort of integrate it successfully.
Okay, thank you. Gary, again, give us a bit of who you are, what you do. And then...
Yeah, my name's Gary McKenna. I'm from a subprime lender called 1+1 Loans. We're currently in the guarantor market, of what's left of it, that is. And we are obviously pivoting onto different products using open banking. I think the main difficulties we found with it was getting people to sign up originally. And that seems to have really sped up, and we're not finding it difficult for them to sign up now because we've integrated via the API, and it's all through a seamless journey on the sign-up process. It's then, once you've got the data, it's took us a long time to just be able to take it all in and try and work out mainly on we use it for affordability and income purposes mainly, and we'll use it again once if there's a forbearance issue moving forward in the future. But it's a powerful tool. It's got to be used now, and it's finding the right way of doing it. It's not an easy journey, but it's certainly not something that you should disregard at all. I think it's something it's the future now. So if you haven't got it integrated now, I think you should certainly be on the pathway to getting it done soon.
I agree. It's not as if open banking is a new thing. It has been around for quite some time. I agree. Certainly in our experience at Equifax, a lot of our clients started with, I'll get the underwriting, I'll understand it, as you were saying, Lucas, get comfortable and then bring it in and start to fully get the benefits. And I think that kind of moves on to the next question, which in terms of the benefits that you get from open banking, kind of in a nutshell, what would you say those are for clients and the end consumer? Mark, start with you.
I think, I mean, the ultimate benefit, you could imagine a scenario where open banking is, consent journey is done at the aggregator stage. Yep. So when customers who are increasingly comfortable with the kind of exchange, they're going to get the best rate for their circumstances. So they go through a slick journey, they consent with the aggregator, it's a very efficient market, they ping all the lenders respond ideally with an appropriate rate for the customer. It's much more likely to be a responsible lending decision.
Yep.
It's much more likely to be a sensible rate. So from the sustainability theme earlier, that means those customers aren't going to be forced to go super high APR just because of noise in credit scores, etc. Vulnerabilities will be detected earlier. Yep. Just in terms, we won't waste time sort of accepting somebody in principle based on credit scores and then later have to reject them because we see something horrible in the open banking data. So all of that, it'll just work all much more efficiently.
Yeah. Okay. Lucas, anything else to add to that?
Yeah, I mean, so for us with open banking, it's not just the decisioning. There's other good journeys for us. So, for example, it's a very simple one, but payment, replacing some of the payment stuff. There's just a pure cost play. It's nice. Yep. It's very easy to persuade your CFO around something like that, right? Yep. In terms of the amount you can save on repayments. And then in terms of, for example, the work we're doing with Asda, where we've launched our credit card last year, how you use open banking in that context with someone like a retailer. Yep. To build propositions out. And you mentioned customers' willingness to share their open banking data. When you think about that value exchange, when we sit down and are working with Asda on our propositions, it feels, personal take, it feels that there's more of a value exchange if that request is coming from Asda. Yep. And you're working with them about, because you're talking about sharing information about where else you're, shopping habits, those sorts of things. Yep. That's an easier flow on the Asda side than it is for us to try and persuade someone, well, why do you want to know about that for credit cards? And so I think there's just some interesting sort of ecosystem things and around how you're getting the data and using it that sort of build into the propositions beyond the risk side.
Okay. Gary?
Yeah, we find that we generally use one credit bureau,
Yep.
which we start with Equifax, and if we can't find any data
You
on
say that one more time, that's fine, yeah.
yeah, that's all right. And then we move to TransUnion.
Oh, don't say that out loud
We
again.
don't bother with Experian.
Sorry.
The costs start driving up nut then.
Yeah.
But you'll see, especially in our sector, some lenders only report to one
Yeah.
bureau. So when you do your credit search, you'll only see certain lines of credit.
Yeah.
With the open banking, you start seeing all these other loans going out or coming in, and it just gives us a broader picture and a better better value, really.
No, I agree. I think that
using
tells
bureau.
back to what Mark was saying, bringing the strengths of both bureau and open banking together. Because, yeah, okay, the credit industry market study, it's coming, so that will provide a further levelling of the playing field, but that's not here yet. So there are differences, we know there's differences, and that's why certainly at Equifax we always said, bring the strengths of both together. It will give you that rounded view of the past performance of bureau, have you been a good payer, bad payer, and what's currently happening in your spend profile. So you bring that together, and I think, Mark, we were talking about that before we started.
Yeah.
I think that's where the use cases to date have focused on income and affordability verification, but open banking opens the door for a whole lot more. I know the last session we were on it started to touch on it, but again, I think, Mark, you were saying you've got lots of stuff in there that we could tap into.
There was a comment in the last session that I was interested to pick up on, that the credit file might be more about risk and the open banking might be about affordability.
Yeah.
I would take a different view on that. I think that both are a function of both.
Yeah.
And so for a given credit score, you can take a very different view on credit risk based on what you see in open banking. Mm-hmm. And as Michelle mentioned earlier, you don't know how much balance sheet, how much debt somebody has until you look at the credit file, because you can't see that in the open banking. And that surely must affect affordability. Yeah. So you kind of need both to take a view on both, I think.
Yeah. No, I 100% agree with that. And again, that's what we've been advocating with clients as well, is the benefit of having both views of the customer. It is important, and again, with consumer duty, responsible lending, it kind of all comes into play. And that's why thinking about APIs, it's like, yeah, it's a necessary requirement to have the API plumbed in, but you can start small and grow big. Certainly we've seen clients who say they need to create a business case. To create a business case, you've got to get understanding, and then that justifies the spend on plumbing this stuff in fully, properly. Is that similar to your experiences that you've seen that's kind of getting that?
Yeah, and again, sort of, if the end state is they both sort of alongside sort of overlapping, the piece and the use case and the way that you get into it, if you're a more traditional business, I think, is on the credit side is it allows you to open up. Again, so typical use cases understand like rental income or understand sort of spotty incomes, those sorts of things. And that's our use case. That's the sensible way in, because it means we can say yes to more. And then you can do, again, sensible stuff like you do the credit checks, and if they don't work, then you can move on. So again, you're managing how much you're pushing through that rather than sort of having everything running in parallel. So it's just a sort of, it's not rocket science, but it's just sensible steps into the process.
Absolutely. And in terms of the APIs that you've plumbed in, and the fact that certainly in the UK we're a bit different, they're standardised. Are you finding challenges with all banks not yet being on the APIs? Is that a problem for you, or is it you've got most of the customer base, it's kind of fine? Or do you want to see that accelerated?
Well, I think that it's not necessarily, without wishing to cause any offence, not necessarily a bank's strength to sort of do that type of innovation quickly.
Yep.
And of course, I would say, wouldn't I, that they don't need to, because we're building a product that's marketed at traditional lenders, so that they don't have to build it themselves. And I think when we talk to those lenders and we say, use this kind of technology, you can halve your credit losses, they don't get very excited. But to build on the previous point, if we make the point that, because they often make the challenge, but if you take the open banking data and you see that gambling, then you can't unsee it. It means you have to say no, it means you do less lending, bad. But we find that for each person that we see something negative, we have to say no. The 6 that you would have otherwise, a traditional bank would say no to, that they could now safely say yes to.
Yep.
So that 6-to-1 swap set, as we call it, is the real sell to traditional lenders. You can take a bigger market share.
Absolutely. And from a bureau perspective, that helps that we're now getting people's files starting to build up again. If it's a thin file customer, they haven't got credit, now you're getting credit, you start to have your file, it all starts to come together, and we're basically fulfilling the circle, in my opinion. Now, I was going to go to Slido to see about questions if people have asked them, how do I get those bad boys up here? Yeah, see, he kept it himself. Oh, cheeky. Thank you. So now, this is where the panel goes. I don't know what he's going to ask me, so I'll apologise in advance. So, first question up. Any worries about affordability complaints where customers claim the product was unaffordable as they always have zero at the end of the month on discretionary spends?
Yeah,
Gary, start with
that's
you.
major for us. That's mainly the reason why we onboarded with open banking. Was the sector we're in is, and all our competitors are gone now because of affordability complaints.
Yeah.
We did see it coming about 2018. That's when we onboarded. It would go to the financial ombudsman, and if you hadn't looked at a bank statement, you lost it, no matter what. And the price is now £750 a complaint, and possibly £1,000 to £10,000 refund plus 8% on top. So it was in our interest to onboard it and work out the affordability. How we do most of our customers, yeah, if they get £2,000 a month, they spend £2,000 a month. How do you differentiate what's affordable? Because, I mean, most people spend all the money coming in, especially in that sub-cohort.
Yep.
So our system goes through all the non-discretionary, such as rent, food, all the utilities, all the bills, and we'll put percentages down for going out, eating out, and then we'll put buffers in. And for our business, it's shrunk our ability to lend.
Right.
But the people we have lent to, the default rate's really low.
Right.
But there's now a big group of people who, the likes of us, are not lending to these people anymore.
Yep.
So that's, as you say, there's more people that you can lend to with thin files, but for us, it's not really grown that large, the thin file. But we can pay, it allows you to pay thin file customers out with ease, I think,
Yep.
open banking. Whereas the credit file doesn't know much about them. Mm-hmm. And you can see their open banking on what they are spending.
Yep.
And you can work it out from there. But it's a case-by-case basis.
Yep.
And you can automate it to an extent, but there always will be, especially in that group of people, where there'll be flags where it's got to be manually looked at the moment anyway.
Yep.
Until AI or machine learning takes over. And are you on that one yet, AI?
We're working on it. Yeah.
You're working on the AI?
On the case.
Just feed it into ChatGPT. That's my next plan.
All right.
We have generous, anything that looks regular and stable, even if we can't identify it as utilities or rent,
Yep.
we count it as a core living expense. Because our view, people can say, if times got tough, we would ditch the Sky subscription or whatever.
Yep.
But our view is you shouldn't count on that. You should assume that anything that's stable should be extrapolated and counted as a core expense.
Okay. I'm not quite sure how long we've got left. There's plenty of time left. Carry on going. That's fine. Don't want to rush things. So, other question. And sounds like it's a lot of hard work is required to learn how to use open banking data to automate decisions. How did the panel fast track this? Mark?
Well, we didn't.
We looked at options, and so there are different partnering options, and you can go and find firms that are doing levels of enrichment and sort of rolling that up.
Yep.
And so you have that. You have a choice to make. We had a choice to make. Are we rely on someone else, or are we working it out for ourselves? Now, for us, our core business, our core spike is understanding and writing underwriting. So ultimately, for us, we have to figure it out ourselves. There are other businesses where that enrichment you'd want to be able to confidently take it off. And,
Yep.
that's the reason why credit score Equifax exist.
Yep.
So, but then you've just got to be very conscious, I think, and that is something that I would say, again, having worked with, maybe this is more about embedded finance, and as people talk about just doing finance, it's fine. We've just got an Equifax score. It's
Yep.
like, do you know what that really means? And do you understand the risks that you are taking if you're taking those scores sort of just at face value, those sorts of things. So yeah, there's different options in terms of how you deploy it. Yeah.
Okay.
We have what we call the virtuous triangle between our underwriting team, expert underwriting team, our awesome data scientist team, and our render team. So the underwriters and the data scientists are constantly like this, I want this new feature, I want this automated. So that tension, out of that tension, yields, comes good new functionality for Abound.
Yep.
And then the render team repackage that and make it available for our other, B2B customers.
Yep.
So it works.
Okay, all makes sense. Super. Next question up. How can we increase customer confidence about using open banking? It's a bit outside APIs, but it's kind of related. Customers don't yet fully trust it and prefer to give manual information. It's a challenging one. There are always going to be a population of customers who go, as we said in the last group, it's open banking, sounds scary. I don't think the title's right, but from your perspective, are there tricks or activities that you do that go, it's actually just, that's the way it works, it's just standard?
We done an A/B test with the website.
Yep.
And it was just different ways of explaining it.
Yep.
And just bullet points as they scroll through the page.
Yeah.
Work it out from there. And our uptake is pretty high.
Yeah.
But that could just be the sector we're in where everybody else has said no.
Yeah, okay.
And they've come to us anyway. But the uptake is pretty good that we found. So.
Yeah.
I think a classic issue with open banking is how does it getting the customer comfortable that they maintain those connections after a sort of point in time decision, those sorts of things. I do think there's a cultural thing around, if we take my generation, like we are terrible about our understanding of how much data we're giving away, all of those sorts of things. And I think there's a sort of, it's both industry and individuals and growing up with this ubiquitous sharing of information and data.
Yep.
It's sort of on all sides in terms of an individual consciously knowing what it is that they're choosing to do. I mean, even just some of the stuff you see around like better displays of cookies sharing data and how your data is being shared.
Yep.
It is absolutely terrifying when and I'm sort of part of that industry.
Yeah, there's a lot of information. Yeah, there's a huge amount of information exchange.
Yeah, so I think it's information on both sides.
Yep.
Would you do open banking if you were asked to do it for an application?
Well, that's where I think that's why the clear use case is if you are going to get rejected, but why don't you try going through this process? Mm-hmm. There's a sell there, but or maybe the opportunity to have a better rate. But that's why again with someone like Asda, it's like, well, if you share the data, then we might be able to give you discounts on your shopping and again it's just
incentivizing it, isn't it?
What's that?
Yeah.
If it comes from a credible source and what the customer stands to gain from it,
Yep.
it's clear. And I think it doesn't necessarily have to be about your peripheral or you can't get a loan. I think it's just it makes the journey smoother. Like some people, fill in this long form or click this button. Whether you're prime, super prime, or subprime, most people would rather click, as long as there's trust, they click the button because it's easier. Right?
Absolutely.
Make the journey slick.
How many people have clicked on I will save my password on my Chrome? I don't know if I have. So like Chrome, and I haven't really thought about the fact that Chrome has all my passwords somewhere encrypted and but it's a lot easier, isn't it? It's just
No, but I think it's back to that value exchange, in my opinion.
Yeah.
So what do I get from it? I mean, certainly back in the launch of open banking, we were working with HSBC. And we spent a long time with HSBC and the FCA to get the wording right. And it was always about, for them, you can do it the traditional route, but it's going to take you 2 weeks to get a decision. Or you can hit this button, you get a decision in 2 minutes. And that was enough to drive people to the right outcome, right outcome for the business, because obviously the benefits are it's cost effective, it's slick, it's better decisions, all that, and the customer, you get the quick decision you want. That was the value exchange then. It's still pretty much the value exchange now, but there are other values you can create. It's just whether we want to get there or not. Okay, don't know what that says, 5 minutes. Okay, so a couple of questions left. How did you get comfortable that the income is a true reflection rather than purely credit to an account? currently seeing overestimation versus underwriter by 75%, someone suggested.
Well, you can. Well, we use account score, and you can see what's the income coming from their employer.
Facts.
You know, it's not a loan coming in.
Yeah.
But sometimes it may categorise it as income.
Yeah.
But that's a lot better now than
Yeah.
when we first started using it in 2018.
And it does get refined. And I know, Mark, we were talking about that earlier on, about the ability to drag and drop.
Yeah, we don't necessarily take the classification from the third party at face value. I mean, it obviously helps if it's got, you know, a company name and limited in the description, and rather than, you know, just a name. If we see, we basically check for recurrence. We check the name. We check whether it matches the application data. If it looks like it's an own transfer, then we have a mechanism that asks the customer to link more accounts. So if they, for example, link the account that they don't get paid directly into, but they do transfer their salary into, we catch that. We tell them to link the missing account, and that way we can verify it.
Yeah, which is, again, one of the things that in Equifax, we define primary bureau by looking at current account turnover, which isn't open banking data. And then we can say there are other accounts out there. If you want to go and search those other accounts, get permission from the customer. So you have that rounded perspective of how they're spending the money, where they're spending the money.
Yeah, I think that's what we find, that slows our process down. It's unbelievable how many people have got 4 or 5 bank accounts, and they're using them all.
Yeah.
So you need to see them all, and it's... Have you found that?
We do have some people just seem to link, you know,
mental.
a dozen accounts, which is insane, yeah. But I think on average it's more like 3. And if they're with the same bank, you don't have to consent separately. You just tick the 3 boxes, which is quite quick.
Yeah, absolutely.
But it's the Monzo cards, and some people like the pretty pink card or whatever they were giving out. And
Personal choice, absolutely. Okay, so winding up now, if, again, as per the last panel, if there's one bit of advice you want to pass out to the group about open banking, API specifically, but open banking in general, what would that be?
Mine's easy. Do underwriting. Doesn't matter what your job is in the business. Spend a day doing some underwriting. It'll open your eyes. Yeah.
I would just say test, and keep testing.
Yeah.
And refine it until you're happy, and get to a point where it's pretty rigid, and work backwards. That's what we've done.
Yeah, I'd say in terms of getting it started, just have a really clear, tight use case and focus on execution. So yeah, it is so expansive, but just really focus in if you need to persuade your business and your CFO and all those things. Yeah,
absolutely. Okay, there we go. That'll be time, I would suggest. So thanks for your time. Thanks for the panel.
Thanks a lot.
I'll let you move on to your next one.
Thank you.